CTE in the blood are Athlon Medical and Exosome Sciences, and New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice. Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Vinous is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that one or two people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have two guys who are ahead of that and one knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And 3, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play, because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas, and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution, because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forest on the land, that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future, in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube size concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, e-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Friday. We made it. Good afternoon and happy Friday, everyone. It's July 23rd, 2021. I'm Tim Stenovic, live in the Interactive Broker Studio in New York. Carol Masser is off today. Blockbuster profits pushing stocks to a new intraday record. Snap, Facebook on a tear. More on that a little bit later, plus the latest on the virus and the Delta variant with Dr. Ian Lusbader of NYU Langone. We're also talking crypto with Michael Sonnenschein, the CEO of Grayscale Investments. It's the world's largest digital currency asset manager. And people are going to keep working out from home even after we no longer have to stay at home. That is the question. Gyms are open again, but the co-founders of Obey talked to us all about the home fitness platform, which is backed by Samsung and Athleta. Also, Blackstone employees love this $100,000 perk. We're going to tell you all about that and more over the next 3 hours. In the meantime, let's get a check on the trading day with Charlie Bell.
Hi, thank you very much. Carol's away, but Tim Stenovic, I've got your back. Here's what's going on. We were looking at records on Wall Street as we head into the weekend here. 2 hours to go until that closing bell clangs on Wall Street with the Dow up 223 now, up by 0.6%. Look at the S&P year-to-date. YTD on the Bloomberg up 17.4%, up another 42 points today, up by about 1%. NASDAQ up 1%. 145, record there as well, up by 1%. NASDAQ 100 index today up by 1.1%. About 87% of S&P 500 companies reporting results so far this season have beaten Wall Street estimates, according to data compiled by Bloomberg, keeping an eye on Snap surging 24.6% after earnings. Twitter up right now by 3.8%, heading in the other direction after last night's report. Intel slumping now by 6.3%. Your 10-year yield, 1.27%. We've got gold, spot gold down 0.2%, 18.03 the ounce. West Texas Intermediate crude down 11 cents, 71.80 a barrel, down by about 0.2%. I'm Charlie Pellet. That, Tim, is your Bloomberg Business Flash.
It certainly is. Thank you so much, Charlie Pellet. Let's get to the Market Drivers Report. And joining us now is Dave Wilson, stocks editor at Bloomberg News. He's here with me in the Bloomberg Interactive Brokers studio. Also joining us, Carl Riccadonna, chief industry economist for Bloomberg Economics. He joins us on the phone from New Jersey. Dave, I want to start with you because what a difference just a couple of days make. If we were doing this on Monday, we'd be talking about a sell-off. Now we are talking about new records, investors buying the dip and more. What's going on?
Yeah, we sure are. And, you know, it is largely a function of what's happening in the social media companies, because if you look at the 11 main industry groups in the S&P 500, communication services are the best performers. And we're talking about like Google's owner Alphabet, also Facebook, both those companies among the big tech firms, you might say, with results due out next week. So now you got Snap and Twitter. We got those numbers late yesterday. They went over very well. Stocks taking off. I mean, you heard Charlie Pellet mention Snap up 25% now. But you got to spare something for anyone who's invested in the American depository receipts of Chinese companies.
Right.
Because that is the flip side of what we're seeing with U.S. stocks, no question. There's something called the NASDAQ Golden Dragon China Index, down almost 9%, flirting with its biggest decline since 2008. And it's being led down by online tutors. You know, we reported, with people familiar with the matter telling us the Chinese government is looking to rein in these businesses, turn them into nonprofits, ban foreign investors from them. And you're seeing losses of as much as 68% in those ADRs.
Wow, some wild stories playing out there. And
oh, yeah.
Sort of just to cap a wild week. Carl Riccadonna, come on in here. We are already thinking about next week, not just earnings, but also hearing from Fed Chair Jay Powell. We did learn today the Federal Reserve is going to start scaling back asset purchases next year with an emphasis on mortgage-backed securities. That's at least according to economists who've been surveyed by Bloomberg. They see that the central bank will raise interest rates at a quicker pace through 2024 than previously thought. Take us into the details here.
Well, Tim, economists and weather men have the opportunity to be wrong and the prerogative to be wrong.
They're lucky.
I personally think that may be what's happening here. I think economists in the survey are overreacting to some of the tone of Fed speak that we've gotten recently, including the projection materials at the June FOMC meeting, which we won't get another update on until September. But those projections showed policymakers starting to angle towards 2 rate hikes in 2023. And I think that that's overly aggressive. If the Hawks had their way, that would be probably the policy course we would follow. But the Hawks will not have their way. The committee is dominated by centrists and moderates and doves. And while there's a few hawks every year that provide some fodder for dissents and whatnot, that's likely not going to pan out. So this is a survey of economists. It's not any messaging from the Fed whatsoever. In fact, at the last FOMC meeting, Jay Powell was very clear to say you should take those far out year forecasts with, in his words, a very large grain of salt. Because it's hard enough to forecast the current environment, let alone 2 or 3 years into the future. Furthermore, he said we did not even discuss liftoff at that meeting. So, all of these forecasts about interest rate hikes and whatnot really are just kind of independent speculation, not any kind of cohesive dialogue among the committee members.
Dave, I know what we're seeing in the markets today is a reaction to strong earnings from Snap and Twitter yesterday. But to Carl's point, does it seem like investors aren't really buying into this survey if we're not seeing that reaction in the markets today?
Yeah, I mean, perhaps there's more of a focus on the earnings that are coming out than on sort of the bigger picture. Because, in general, I mean, you've got numbers that are being pretty well received. Consider you're almost at 88% of companies in the S&P 500 beating analysts' average earnings estimates for the second quarter. Pretty much in line with what we saw with the first quarter. So, take that for what it's worth. But beyond that, I mean, you're seeing a number of companies basically come out and say they're able to deal with cost increases. I mean, that's a major issue, whether you're talking about raw materials or labor or transportation. Certainly those costs have been going up. When you put it all together, I mean, I'm just looking at a number. Our latest estimate for the S&P 500 in terms of second quarter earnings growth compiled from individual companies, 78%.
Wow.
Yeah, and that's up from about 65 when the quarter ended. So it just goes to show you how things are panning out so far. And next week will really kind of be the height of earnings season, arguably.
Right. We're going to hear from many different companies: Tesla, Apple, Alphabet, Microsoft, AMD, PayPal, Qualcomm, Facebook, Amazon. The list goes on. Carl, come on back here and talk a little bit about what you expect to hear from Fed Chair Powell next week. But more interestingly, perhaps, what you would ask him if you were given the opportunity on Wednesday.
Well, if I had the opportunity to be an enterprising young Bloomberg reporter at the Fed press conference, the question I would ask is, we all kind of understand generally how tapering will work and what the timeline looks like for tapering, but is it a fait accompli that interest rate hikes will happen before they start to shrink the size of the balance sheet? Because as flat as low as long-term yields are, and as flat as the yield curve is right now, it's telling you that this could be a 4 rate hike cycle, which pushes us closer and closer to a liquidity trap. So I would like to at least, spark the idea with the chairman. I'm sure he has considered this, but to see if he's seriously considering that they could maybe let the balance sheet start to run off before they start raising interest rates. And Jay Powell is a dove. He would love to see a steeper yield curve, push us further away from that zero lower bound. That could be something he'd contemplate at that meeting. Other than that, it's just going to be kind of more of the same in terms of them assessing about transitory inflation and labor market dynamics.
We'll, of course, bring it to you live as it happens. Carl Riccadonna, Chief Industry Economist at Bloomberg Economics, on the phone from New Jersey. Also with me here in the studio, Dave Wilson, Stocks Editor for Bloomberg News. He's with me in the Bloomberg Interactive Brokers studio. Guys, have a great weekend. Dave, we will see you in just a little while for your chart of the day and your stock of the day. Let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey there, Nance.
Hey, Tim. The Tokyo Olympic Games have started with the March of the Athletes and, of course, fireworks. Tennis star Naomi Osaka lit the cauldron, ending the Flames' long journey from Greece to Tokyo. The Games begin a year later than originally planned due to the pandemic. First Lady Jill Biden was in the stadium today cheering on Team USA. Known as the Indians since 1915, Cleveland's Major League Baseball team will now be called the Guardians. The change was announced in a Twitter video today, narrated by Tom Hanks, who once lived and worked in Cleveland.
This is the city we love and the game we believe in. And together, we are all Cleveland Guardians.
Many Native Americans considered the Indians' name to be offensive. The choice was made after more than 1,200 potential names were reviewed. Pfizer's COVID-19 vaccine seems to protect against severe disease, but it is not stopping the spread of infection. Bloomberg's Amy Morris reports on the new research.
The study in Israel found the Pfizer vaccine protected patients from developing a severe case of the Delta variant of COVID-19, but was only 39% effective in preventing infection. Contrast that with a study out of the UK in the New England Journal of Medicine that finds the vaccine did protect well against contracting the virus. The report from Israel concedes its data could be skewed because of different ways of testing vaccinated groups versus those who are not vaccinated.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much for that update, Nancy. Joining me now is Charlie Pellet here in the New York City newsroom. Charlie, a couple virus headlines to get to. Mayor de Blasio urging New York City private employers to require COVID shots, saying that mandates for their workers could be a good thing, though he did stop short of including and instituting a similar citywide requirement for municipal employees.
Indeed, during a radio interview on WNYC, he said, quote, if anyone is asking my advice, particularly large employers, move toward vaccine mandates now. He went on to say, I urge every employer to go to any form of mandate that you're comfortable with. The mayor's comments came 2 days after he said workers in public hospitals and clinics would be compelled to get vaccinated or submit to weekly testing for the virus.
We should note that here in New York City, the city missed its goal of fully vaccinating 5 million New Yorkers by the end of June. The total stood at less than 4.5 million. That's as of July 22nd. And the city administered less than 7,000 doses yesterday. That's far below its record high of more than 120,000 doses on April 8th. It's just showing, Charlie, that it's harder and harder to get those folks who have not yet been vaccinated to go and get the shot.
Indeed. And I just want to add that during that conversation, Tim, on the radio, he also differentiated between what is happening in the private sector versus the public sector, saying, quote, private enterprise rights are different than those for a public entity.
Yeah.
He said, we all need to climb this ladder together. We will have more to say in coming days.
Another headline that I want to get to in the remaining time that we have, Charlie, is about how people should think about the Delta impact on the U.S. economy. The rapid spread of the Delta variant, it's sown volatility in financial markets this week, think back to Monday, but thus far economists are maintaining their forecast for a historically strong U.S. recovery.
Indeed, and for now, the rough consensus seems to be that spending, travel, business activity will only be affected at the margin. Even late last year, when waves of COVID-19 cases hit the U.S., the recovery did continue apace.
Yeah, we're going to have much more in just a few minutes when we speak to Dr. Ian Lusbader, clinical professor of medicine at NYU Langone Medical Center. He's going to join us right after the break. This is Bloomberg Radio, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks trading at or near session highs. We're looking at records, earnings, the catalyst. About 87% of S&P 500 companies reporting results so far this season have beaten Wall Street estimates, according to data compiled by Bloomberg. Twitter, Snap leading a rally in social media firms today. Snap, for example, up 24.6%. Twitter up by 3.9%. Reporting earnings this morning, American Express up now by just about 1.4%. Intel, though, heading the other direction after earnings, down now by 6.4%. S&P at a record, up 43, up 1%. The Dow up 215, also a record, up 0.6%. NASDAQ up 155, up 1.1%. 10-year down 132nd, 10-year yield 1.28%. Gold down 0.2, 18.04 the ounce. And West Texas Intermediate crude 71.89 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. Thank you so much, Charlie Pellet. Well, a lot of virus headlines to get to on this Friday afternoon. Pfizer shots halting severe illness, but still allowing infection in Israel. Pfizer also supplying the U.S. with millions of shots for young kids. And then LA's fully vaccinated people. They are making up 1 in 5 infections right now. And I do want to get an update to the global tracker that we follow here at Bloomberg. Cases topping 192.5 million and deaths exceeding 4.1 million. At the same time, more than 3.7 billion doses of the vaccine have been administered. We should note that many of those vaccine doses do require 2 shots to have someone considered fully vaccinated. Well, let's get to all that and more with Dr. Ian Lustbader, clinical professor of medicine at NYU's Langone Medical Center. He joins us now on the phone from Long Island. Dr. Lustbader, how are you?
Good. Thank you, Tim. Happy Friday.
Yeah, happy Friday. It's good to talk to you. I want to talk a little bit about what we learned from Israel earlier today. Pfizer's COVID-19 vaccine provided a strong shield against hospitalization and more severe diseases in cases caused by the contagious Delta variant in Israel in recent weeks, even though it was just 39% effective in preventing infections. That's according to the country's health ministry. What do you make of that 39% figure?
So I think we're seeing Darwinian behavior in action and a more aggressive viral escape, or these breakthrough infections. The good news is that the antibodies that are produced by the vaccines still seem to provide some good protection in reducing hospitalizations and deaths. Unfortunately, it is becoming less effective over time for acquiring the Delta infection. And there are a number of articles. There's a recent article in Nature from July of 21 that does show the Delta variant is less resistant to not only monoclonal antibodies, but also to endogenous antibodies from vaccines. So, unfortunately, the Delta variant spike has changed enough that it is escaping, in part, the antibodies that we've produced from the vaccine. And hopefully, it really is a race. It's a race between getting enough people vaccinated versus the spread of the Delta. And at this point, it looks like Delta's winning.
What does that look like if Delta wins? Not just if it's winning, but if Delta wins?
Well, I think it really will mean more widespread infections and widespread deaths. In the United States, you have to sort of compare country to country because they're not all similar. For example, Mexico is seeing a big outbreak.
Yeah.
They're only about 22% vaccinated. We're over 50% vaccinated. India is a little over 10% with a much bigger population. So the substrate, the number of people who can get sick with Delta or any other variant for that matter, is much greater in certain countries. But in the United States, I think what that means at this point is that we're probably looking at another 100 million people at this point who have not been vaccinated or may slowly get vaccinated, probably acquiring Delta, and that will probably mean, by my guesstimate, another 100 or maybe 200,000 deaths.
Wow.
Which will bring us to the 700,000 to 800,000 deaths, which is unfortunate, but that's those are the numbers, or the way the numbers are looking at this time.
Well, speaking of numbers, I do want to make sure to include these numbers for Pfizer's vaccine. We did mention that it was just 39% effective in preventing infections. That's according to the health ministry in Israel. The health ministry also saying that it provided 88% protection against hospitalization and 91% against severe illness for an unspecified number of people. Those people were studied between June 20th and July 17th. That's according to a report that came out Thursday from the health ministry. So that's pretty good news, because it still is very effective in providing against hospitalization and severe illness, right?
I agree completely. Look, the vaccine over time is becoming a little less effective in preventing the acquisition of COVID, but it certainly seems to be pretty effective in preventing severe disease, hospitalization, and deaths, which is really what we want. And fortunately, Delta has relatively mild symptoms: runny nose, headache, really common cold symptoms. Some people may not even know it. Obviously, if you've had 2 vaccines and you're coughing a lot or short of breath, get retested, get a swab. And if you have COVID present on the PCR nasal swab, contact your doctor. We do have some treatments like monoclonal antibodies, which can still be effective. They're a little less effective, but this also highlights why we do need to look for better treatments, people talk about a variety of things that really are very early studies, whether it's ivermectin or other antiviral drugs. Merck is working on an antiviral. Unfortunately, by the time studies come around, we will have a lot more infections. But fortunately, we're not seeing greater deaths. It doesn't seem to be a more lethal strain, which is good.
Yeah, it's good to get a little bit of good news in here. I do want to get your thoughts on, just in the last minute that we have, and then we're going to come back to you, Dr. Lustbader. Los Angeles County's top health official saying that fully vaccinated people made up 1 in 5 COVID-19 infections in June, and warned that the figure may rise in July with a higher level of community transmission. Does this mean that even if we're vaccinated, we should be wearing masks?
That's a good question. Masks are questionably effective. Certainly the N95 masks are much more effective. Masks tend to protect other people. When you wear a mask, you have COVID, you're coughing, it contains those secretions. The virus can really get around all normal surgical masks and kind of these barrier masks. I think it's something, if you have an underlying disease or if you're worried, definitely wear a mask. There's no harm to that.
Yeah.
How beneficial that will be is unclear.
All right, well, we have much more to get to in just a few minutes. Dr. Lustbader, stand by, because we're going to take a quick break. We're going to do some news, and we'll be right back with you. That's Dr. Ian Lustbader, clinical professor of medicine at NYU Langone's Medical Center, joining us on the phone from Long Island. Many more questions and answers on the other side. This is Bloomberg Radio, and this is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec live in the Interactive Brokers Studio in New York. In just a few minutes, we're going to get back to Dr. Ian Lusbader, clinical professor of medicine at NYU Langone's Medical Center. He's joining us on the phone from Long Island. Many more headlines to talk about. Pfizer supplying the U.S. with millions of shots for young kids. Also increasingly seeing hotspots around the world. COVID exploding in Cancun and Los Cabos as new wave hitting Mexico. All that and more in just a few minutes. In the meantime, let's get a check on the trading day with Charlie Pellet.
Thank you very much, Tim. We're at or near session highs right now with the Dow, the S&P, and NASDAQ all advancing. Another raft of blockbuster corporate reports pushing stocks to a record at the end of the week that started with concern about a peak in earnings and a coronavirus resurgence. About 87% of S&P 500 companies reporting results so far this season have beaten Wall Street estimates. Next week will be extremely busy. Lots of big names, including Apple, Alphabet, Facebook, and Amazon, among many, many others. S&P right now up 42. That is a gain of 1%. We've got the Dow up 198 now, up by about 0.6%. NASDAQ up 153, higher by 1%. 10-year yield, 1.28%. Gold up 0.2, 18.02 the ounce. And West Texas Intermediate crude up 0.1%, 72 even a barrel. European regulators have cleared Moderna's COVID-19 shot for children aged 12 to 17, offering a second weapon in the push to vaccinate teens on the continent as the Delta variant spreads. Well, as virus cases rise in the United States, there is a warning for young people who think they can't get COVID. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health. He told us the vast majority of hospital admissions now involve people who are under the age of 65.
We're seeing these very, very focused outbreaks across the country, but this virus can spread very easily. So when you have a large percentage of the population that isn't vaccinated, the virus just spreads through it like wildfire.
Dr. Pekosh, of course, with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. The vaccine stocks we follow for you all higher on this Friday. Pfizer, for example, up 0.5%. Its German partner BioNTech, the ADRs up by 1.1%. AstraZeneca's ADRs up 1%. Moderna surging 6.8% on that European news. Johnson & Johnson up by 1.1%. Recapping, stocks at a record. S&P up 42, up 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. Thank you so much for that update, Charlie Pellet. Well, let's get right back to the latest on the virus with Dr. Ian Lusbader, clinical professor of medicine at NYU's Langone Medical Center. He joins us on the phone from Long Island. Dr. Lusbader, here we are. It's July 23rd. We are in the thick of summer travel season. I traveled for work last week, over the weekend, and then this week. Airports were absolutely packed. There was not an open seat on any of the flights that I took. This is happening at a time where we are seeing hotspots emerge, not just here in the United States among unvaccinated, but in other parts of the world too. You mentioned Mexico when we were talking earlier today. An article on the Bloomberg by our own Andrea Navarro writing that COVID's exploding in Cancun, Los Cabos, as a new wave has hit Mexico. In Cancun, for example, cases have soared to a point where the Hard Rock Hotel has set aside 2 floors for guests with symptoms, and some hotels are saying they're offering discounts for those who are in quarantine until they're no longer contagious. It raises the question, should people, even if they're vaccinated, be traveling right now?
You know, that I think has to be a very individual decision based on your underlying health. And when you got the vaccine, we are periodically checking antibody levels. And most patients that I've just randomly checked, or if they're traveling and concerned, some countries require antibody proof. Most antibodies are high, very high from spike protein. But now we're seeing that alone doesn't really fully protect you. I think it's going to be very hard to get the genie back in the bottle. You know, we're really only vaccinating globally a very small percent. It is likely this is just going to continue to spread because it's so highly contagious and fortunately not more lethal, but totally you will have an increased number of deaths. I think people have to be careful to go to hotspots like Mexico, where only 20% of people are vaccinated and they're having outbreaks. You know, I would think twice about putting myself in that environment if I could avoid it, or to be very careful and distance and try and get an N95 mask.
Did you say that you were able to test for antibody levels ahead of people going to hotspots?
Yeah, I don't want to encourage everyone running to their doctor saying, please send antibody levels.
Right.
But just randomly in some patients, because when they do travel, they're required to not only show proof of vaccination, but actually antibodies. And so randomly, when I've checked people for spike protein, they're very, very high, which is good. In other words, it shows the vaccines are working. You know, and there's a debate as to vaccinating younger and younger kids. There are pros and cons to that, obviously. But the problem, unfortunately, is even if you have high antibodies, that doesn't seem to prevent the escape. In other words, that Delta, you may get that infection. It does seem to be partially controlled, but it doesn't guarantee that you will not get that a Delta infection for sure.
Dr. Lustbader, I just wonder, and this is a question that we've talked about before, with the Delta variant spreading so rapidly among unvaccinated populations here in the United States and outside of the United States, do we get to a point where we think about being on the other side of this vaccine, or the other side of the pandemic, rather, is just a question of how quickly people can get infected and either recover or not recover, and that's how the virus dies out?
Right. That's how the 1918 pandemic spread. It took 3 years. A large percent of it was about a 10% death rate. We fortunately are much lower than that, somewhere 1% or below. But that varies from country to country. There are some countries that have a very high percent, whether or not that's due to poor hospital facilities or underlying medical illnesses, obesity, diabetes. Brazil, for example, has a very high percent death rate. But yeah, what you're saying is unless we can get vaccines distributed, we're really looking at 8 billion people somewhere in that, the global population getting infected. And most will do well and recover. The problem is we're seeing post-COVID or long haul symptoms. So even though most people do well, COVID leaves a mark. There's some brain issues and brain fog and long haul symptoms. So if you can avoid it, it would be good, which is an argument for vaccinating young kids. We vaccinate, young kids for hepatitis B, but in kindergarten, long before they're going to have any exposure or possible exposure. So it's something to think about. We need, good safety data, but we're playing catch up at this point. The virus is really outrunning us, and all we can do is try and block and tackle as best as can be.
It's too bad because a few weeks ago, I don't think we would have been having the same conversation. Dr. Ian Lustbader, thank you so much for taking the time as you do on Fridays. Clinical professor of medicine at NYU Langone's Medical Center. He joins us on the phone from Long Island. Let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey there, Nance.
Hey, Tim. The Olympic cauldron in Tokyo is burning bright for the world to see. It was lit at the end of the opening ceremony by tennis star Naomi Osaka. Then fireworks lit up the sky. Bloomberg's Sophie Jackman is in Tokyo and says there is some relief that the games are going on, but it's far from the party atmosphere you'd expect.
Over the course of the year, organizers whittled down plans to have stadiums full of fans, and now the stands will be empty. Athletes are very much cordoned off into the Olympic Village and then their venues, trying to keep them in a bubble as much as possible. And the general population here, we're all under a state of emergency. We're being encouraged to stay indoors.
And with overseas fans barred from these games, Bloomberg's Sophie Jackman reports Tokyo's hospitality industry is missing out on the usual windfall for the Olympic host city. Well, the U.S. has been hit with new sanctions from China. Nathan Hager has details on that.
This is in retaliation over the Biden administration's warning to business last week about doing business in Hong Kong. The Ministry of Foreign Affairs in Beijing says 7 Americans will face sanctions, including former Commerce Secretary Wilbur Ross. In an interview with Bloomberg this week, the president of the American Chamber of Commerce in Hong Kong, Tara Joseph, said businesses still see the city as a good place to be based, but they want assurances from the Hong Kong and Chinese governments that they won't restrict internet access or the free flow of information. In Washington, I'm Nathan Hager. Bloomberg Bloomberg Radio.
Cleveland's Major League Baseball team has tossed the Indians name and is now going with the Cleveland Guardians, just the latest professional team to change a name considered offensive to many Native Americans. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy. Tim Stenevec in the Interactive Brokers studio in New York. This is Bloomberg Business Week. I'm joined by Charlie Pellet. Charlie, I got to tell you, I know I've been talking about this a lot over the last few days, but it is the first time that I have flown in a very long time. The night before I was supposed to fly, leave Sunday morning on an early flight, I got a notification that my flight had been canceled. Fortunately, shout out to the Bloomberg Travel Department. They were able to get me on another flight the next day, but it was a very difficult process. I got the last seat that was available, and it's certainly not everybody's in the position where they can just call on someone to help them do that. And that is why summer vacations could be a travel nightmare here in the U.S.
Indeed. It's a story written by our Daniela Satori Cortina. I can only imagine what that ticket cost for you, Tim, to get you down to Texas. But, you know, case in point, you had to go. You were off on work. You were off on a mission. You had to cover that space flight last week. And there was no question that you absolutely, positively had to be there. For leisure travelers, a little bit different. Talking to a colleague today, his travel plans got completely messed up. Something like a 5-hour connection in Atlanta, waiting for a plane, waiting for different planes, all sorts of factors. Some of this having to do with finding workers to drive fuel trucks. A lot of this having to do with perhaps the airlines did not anticipate the amount of demand that they're getting for summer travel. But indeed, had my own experience. Had a college kid trying to get from Boston back down to Washington D.C. Figured I would do him a favor and put him on a cheap flight for roughly $100.
Yeah.
He was going to take the bus instead. It's a 10-hour journey, and he ended up getting stranded for several hours in Boston awaiting a flight. So it's a very familiar story.
Next time, try the train, Charlie.
Yeah, well, we thought about that too, but that was 6 or 7 hours, depending on whether you want to shell out for a Acela or just the Northeast Regional.
Northeast Regional for the kid, okay?
Yeah, well, next time, perhaps lesson learned. But as Tom Keene told me once, you gotta schedule on how things typically go, and this summer has been an aberration.
It's been really tough. The question is, can airlines pick up that capacity in time to absolutely pick up with demand? This is Bloomberg Radio, and this is Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Just getting word that Property Guru is going to go public in a partnership with Bridgetown 2 Holdings. That headline from the Bloomberg Professional Service. Property Guru will trade on the NYSE. We're looking at a day of records on Wall Street. Just over an hour to go ahead of the closing bell. Stocks holding near session highs right now. Right to the numbers. We'll give you some color in a moment here with the S&P up 42 at 4409. That is a gain of 1%. Year to date, the S&P now up by 17.4%. The Dow up 200 points, up 0.6%. NASDAQ up 147, up by 1%. 10-year down 2/32, 10-year yield 1.28%. Gold down 0.3%, 18.01 the ounce, and West Texas Intermediate crude up 0.2%, 72.06 a barrel. Another raft of blockbuster corporate earnings reports pushing stocks to a record at the end of a week that started with concern about a peak in earnings and a coronavirus resurgence. Among some of the companies out with earnings, Snap, it reported last night. Today it is surging 24.6%. Twitter up now by 4%. Intel heading the other direction, down now by 6.3%. And that's a Bloomberg Business Flash.
It certainly is. Thank you so much, Charlie Pellet. Well, the new issue of Bloomberg Business Week is out on newsstands now. All of the articles are also available online. Joining me now is Joel Weber, editor at Bloomberg Business Week. He's with me in the Bloomberg Interactive Brokers studio. Joel, I got my hands on the new issue, the cover story, the border, the builder, the border, and the $30 million boondoggle. Tommy Fisher, we went through his story yesterday. How did you choose it for the cover?
We had this amazing photo shoot, and you get to see his wall, and it is not ugly. It is striking, and we also photographed the very end of it, which speaks to the project because he built he's only built 3 miles of it. It looks highly secure because of that. You can just walk around the end of it if you need to. But once we kind of saw all the artwork and have this great untold story of this guy who was bold enough to drop $30 million building a wall. I was like, that's an untold story that I want on the cover this week.
I got to tell you, too, just scrolling through Twitter yesterday and today, this story has absolutely taken off.
It's caught wildfire.
It did.
Totally gone viral. Yeah.
Why do you think that is? I mean, what is that? Not the secret sauce, because I think that's kind of impossible to answer, but this story seems to kind of touch every little list when we think about what makes a story work.
Well, I think the backdrop to the story is that, keep in mind, we have a crisis on the southern American border right now, right? So, and I think wherever your politics are on immigration, on the wall itself, there are elements of the story that are going to resonate with you. And I think we told a kind of a bigger story about the business guy sort of at the center of this particular wall. And it's really, we don't go into the immigration one way or another. So I think it ends up resonating with a lot of different audiences because of that. And at the very center of it is this, businessman who made a choice to put $30 million into a project that he has not made that money back on yet.
One part of the story that I found absolutely fascinating was the idea that the state of Texas could actually be the one potentially to continue this wall project now that President Trump is no longer in office.
We have no real intelligence behind that, but Governor Abbott has indicated that he is interested in building a wall. If you're a Texan and someone's already solved a problem for you, like Tommy Fisher could have done, I think that puts him sort of at the front of the list, right? What Tommy Fisher accomplished was the bigger thing here, which was that he built a wall on private land. This is a private project, right? It's not federal land, which is what has allowed a wall to exist elsewhere on the border. The fact that Texas is all privately held along the Rio Grande, that's a huge problem if you're going to do any sort of building like this, and why it's sort of an unlikely success story for him. Although, again, I'll mention that he's still out $30 million.
Yeah, he's still waiting to get paid. Well, let's move a little further west to West Texas. That was the site Tuesday of Jeff Bezos taking off from near Van Horn, Texas.
You were there.
I was there. That's how I know this geography so well. I did a lot of driving in West Texas. By the way, did you know the
Big
speed
open
limit?
areas.
Speed limit, 80 miles an hour.
I think it's advisable 80 miles an hour. I think you can go as fast as you want.
In this teeny little Nissan that I rented,
I'm hoping
I could barely make it to 80 miles an hour.
Okay.
But I nonetheless was able to. Ashley Vance had a great piece and has a great piece in the current issue of the magazine, arguing that the future of space is much bigger than just Bezos, Branson, or Musk. It was a great read to really dig into ahead of my visit there.
Yeah, so Ashley wrote this story. He knows a lot about space and sort of the space economy. And what his ultimate takeaway, I think, in this story was like, it's for all the billionaires in space all of a sudden, that is just a very small amount of the bigger space story.
Yeah.
The space economy, in part helped by SPACs, actually, has really caught fire. We're talking like what the economy of the future is really going to be powered by this. And I think, what the Musk angle here is, obviously he's in the rocket business, but Starlink and the internet potential is also on a lot of people's minds now as that becomes potentially a really viable way to get cheap broadband to places that haven't had it yet. But he also found this kid, and this is what I love about what's happened with space. He found a kid who's basically just been able to use satellites that have amazing imaging capabilities. And this kid who's like just graduating college was the one who found what ends up being, a new nuclear site in China that heretofore was previously unknown.
Right.
So Ashley goes a lot of different places, but it's like, forget about the billionaires. There's a lot of other really interesting things happening in space.
I think it's such an important point, and I think it's a really good way to think about billionaires going to space, because they've said that space tourism is just a small part of this. And if we were to think back to 60 years ago when Alan Shepard was the first American to go into space, we didn't know there was going to be such thing as an internet. We didn't know that there could be satellites who could deploy, that Elon Musk could deploy and get internet to millions of people who don't actually have internet. So I think the opportunities here are ones that we don't even know about.
And it's potentially the breakthroughs are just going to be coming with increasing speed. So the cost of getting up there is still beyond my budget, but the other effects that will come out of this stuff is going to be, I think it's for the next 5 to 10 years, it's going to be a really fascinating space to watch.
Well,
space to watch.
I see what you did there. Joel, I do want to get to a couple more stories. This one by Kelly Gilblom, product placement finds new relevance in ad-free streaming.
I think this is really an interesting story because part of the reason, and Kelly goes into this in the story, because of the rivalry and the shakeout between Apple and Facebook, there is this sort of new dawn that I think everyone's trying to figure out what it's going to look like. How are advertisers going to spend that money when suddenly Facebook maybe doesn't track them as well now that users have the ability to opt out with iPhones and whatnot. So Kelly had this great little insight, which was like product placement has already been booming. And it's because people are getting out of, obviously, the linear version of this on traditional shows. And the streaming era makes it way more competitive because there's so much more opportunity. And you can also digitally change the product.
That part is unbelievable.
Right?
And the image that you have here of like a green screen can.
Take your pick. What your brand here, right?
Well,
Doritos, Frito-Lay, you name it. It could be Ruffles next week.
That's what I mean. When can they change it based on who's watching?
Yeah, I think it is tied to how much money you're willing to spend.
Yeah.
And maybe the length of the contract. But, I think the takeaway here is that we don't know how big this could get, but even a retro space like product placement could be on fire again.
Well, it's a fantastic issue full of great stories. Joel Weber, editor at Bloomberg Business Week, with me in the Bloomberg Interactive Broker Studio. Check out the new issue of Bloomberg Business Week online and on newsstands now. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Tom Barrack will be freed on $250 million bond as he awaits trial on charges he illegally lobbied the U.S. government on behalf of the United Arab Emirates. Barrack, the founder of Colony Capital and a Trump ally, has been in a San Bernardino jail since his arrest earlier this week in California. His co-defendant and colleague Matthew Grimes was arrested in Santa Monica. He has also been held at that jail. Stocks are pushing higher. In fact, we're looking at records here with 60 minutes to go ahead of the closing bell. Another raft of blockbuster corporate reports pushed stocks to a record at the end of a week that started with concern about a peak in earnings and a coronavirus resurgence. About 87% of the S&P 500 companies reporting results so far this season have beaten Wall Street estimates. Evercore ISI Chairman Ed Hyman says retailers have more power to pass higher prices on to consumers than ever before, and that will spur earnings growth in the quarters ahead.
I think earnings will increase again. We have earnings in the second quarter at $2.20, which is probably $20 ahead of the consensus, and then maybe $2.30 and maybe $2.40 in the third and fourth quarters, and that puts the PE, something like 19 times with bond yields, below 2%.
Evercore ISI Chairman Ed Hyman was interviewed on Bloomberg Television and Radio. Twitter and Snap leading a rally in social media firms. Today's sales blew past forecasts. Snap, for example, up 25%. Twitter up by 3.7%. S&P up 42, up 1%. The Dow up 204, up now by 0.6. NASDAQ up by 1%. 10-year yield 1.28%. Gold down 0.3%, 18.01 the ounce. That's a Bloomberg Business Flash.
Thank you so much.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Well, happy Friday, everybody. Tim Stenovic live in the Interactive Brokers Studio in New York. Carol Masser is off today. The price of Bitcoin right now, pretty much flat, trading at just over $32,150, still down more than 50% from its high of nearly $65,000 back in April. Well, let's get into all things Bitcoin, cryptocurrency, decentralized finance, aka DeFi, and more with Michael Sonnenschein, the CEO of Grayscale Investments. It's the world's largest digital currency asset manager. Michael, it's so great to chat with you. How are you doing on this Friday afternoon?
I am doing excellent. Thank you so much for having me. Excited to chat with you.
Well, I'm excited as well. I want to start with the big picture here, just the price of Bitcoin. I think still when people think cryptocurrency, Bitcoin is the number one thing that comes to mind, and you can't help but think about that more than 50% decline that we have seen in recent months, struggling to get back to anywhere close to where it was back in April. What do you make of the volatility that we've seen and sort of the struggle for it to get higher?
I think investors are used to this kind of volatility in the digital currency asset class as a whole. That certainly includes Bitcoin. It has been a very interesting market. I think we've seen a couple of exchanges have some leverage come out of them, which we generally think is something that's healthy for the overall ecosystem. But when we do see pullbacks in prices like this, which is not a new phenomenon within crypto, we tend to see these kinds of corrections, see the asset class form a stronger base to only eventually go on to take out higher highs over time. And so when investors do see these pullbacks, they will often use them opportunistically to add to their positions and be able to form a larger position in digital assets like Bitcoin and others.
What about the next positive catalyst for Bitcoin? I can clearly remember the biggest negative catalyst that we recently heard about, and I think it's fair to say that Elon Musk expressing concerns a few months ago over the environmental cost associated with cryptocurrencies and Bitcoin. But that came after he said that Tesla would accept Bitcoin as payment for Tesla's cars, and that seemed like a really big positive catalyst. What are you thinking is the next actual positive catalyst for Bitcoin? We heard comments from Jack Dorsey yesterday about Twitter's future in Bitcoin. They didn't seem to help Bitcoin's price much.
I think you're going to continue to see more announcements of both Bitcoin and the crypto asset class as a whole continuing to being folded into the traditional financial services space. So even just yesterday, you saw banks like JP Morgan announcing that they were going to give their clients the ability to invest in cryptocurrency funds, including, grayscale products. And I think that in the near term, you're going to continue to see wins for the asset class overall, whether some of those announcements do come from banks like JP Morgan and others, or you're continuing to see companies like Twitter and Square and Tesla and MicroStrategy, continuing to see Bitcoin and other assets move onto corporate balance sheets. And now even seeing nation states looking at adopting Bitcoin as legal tender. These are the types of wins that I think help to not only, solidify the role that crypto has within the investment community, but also really begins to shift perception. So exciting stuff from our point of view.
Now that JP Morgan has made this announcement, who in your opinion do you think is the next bank to do something similar?
Well, I think you're certainly going to see that. It's already been the case that grayscale products have been available to be bought and sold through many of the online brokerage firms. But now moving into some of the wirehouses like JP Morgan would not surprise us to see some of the other wirehouses and bulge bracket banks begin to follow suit. We've kind of seen a similar trend amongst many of them as they built out either their blockchain working groups or even just made direct investments into digital asset related businesses, so they can continue to not only learn about the asset class, but also demonstrate just how fervently they're responding to investors' preferences and wanting to get exposure to the asset class.
So when you're, Michael, speaking with these banks and getting an idea for what they want and the services that they want to be able to provide their clients, JP Morgan Chase, for example, their wealth management clients are going to be allowed to invest in a selection of crypto funds, including Grayscale Bitcoin Trust from you guys, among others as well. What are they trying to provide their clients with? Like, what are their clients coming to them and saying that they need that's causing a bank like JP Morgan to come to you and say, we want our clients to get exposure to this?
Well, as an investor today, there is a general appreciation that cryptocurrency as an asset class is not going to go away. It's something that is here to stay, and investors want access to it. Now, the reason that JP Morgan and other banks have to make these policies or amend these policies is because they don't offer the ability for their investors to get access to Bitcoin or other digital assets directly through their platforms. Their platforms are typically providing services that allow them to access lending and credit and buying stocks and bonds and ETFs, but not yet crypto. And so their clients are typically doing that type of business away from the banks themselves. So if JP Morgan and others continue to open themselves up to having the ability for their clients to access cryptocurrency funds like Grayscale on their platform, well, then they continue to have a more holistic picture of their clients' investable assets. And not only that, but also demonstrates to their clients that they're really listening to their preferences.
What is the role that you believe that Bitcoin plays in a traditional portfolio right now?
Well, I think it depends on the kind of investor that you are. I'd say the first is, many investors look at Bitcoin as a digital gold or a digital store of value. So they look at it as an asset that can maybe help, curb inflation pressures that their portfolio may experience. So whereas investors maybe went to gold or bonds or other flights to safety, now they also have Bitcoin as an option in their portfolios. I think other investors may look at it as a technology investment, more akin to maybe payments or some of the technology investments that they may have in their portfolio. And then I think other investors may look at Bitcoin not only either as a payment mechanism, and so it maybe is something that, is more akin to remittance and some of the money transfer mechanisms that may be out there. And for some investors, it's just an entirely new asset in their portfolios. And where they make room for it will vary depending on how they're allocated.
Michael Sonnenschein, sit tight because we are going to take a quick break, do some news, and then come right back to you talking more DeFi, crypto, and Grayscale. Michael Sonnenschein, Chief Executive Officer at Grayscale, on the phone from New York City. Much more with him in just a few minutes. This is Bloomberg Business Week, and this is Bloomberg Radio. Let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey there, Nance.
Hey, Tim. Negotiations are continuing as senators work on reaching a deal on infrastructure spending. Senator Bill Cassidy of Louisiana is one of the Republicans on the bipartisan team working on the proposal. He tells Bloomberg they're pretty close to consensus on language in the bill.
We're working through today, through the weekend. We hope to have language either by Monday or by early next week.
Lawmakers are in the process of trying to pass two proposals that make up the bulk of President Biden's Build Back Better economic agenda. A $1.2 trillion bipartisan infrastructure bill, which focuses on mostly traditional projects like roads and bridges, and then a $3.5 trillion reconciliation bill, which focuses on social programs and climate change. Pfizer and BioNTech will supply the U.S. government with another 200 million vaccine doses, even though many refuse to receive a shot, which is causing a rise in cases. Bloomberg's Irv Chapman has a status report from Washington.
With schools preparing to reopen, Dr. Peter Hotez of Baylor College of Medicine said children are endangered by the spread of Delta variant from unvaccinated adults and teens.
If enough people get vaccinated in the community, it slows or halts transmission, so the kids not eligible to get vaccinated are protected. And that's what's happening in the Northeast. But unfortunately, it's not happening down here in the South, where the vaccination rates are just so abysmal. It's all hands on deck to try to keep the kids from getting infected.
Dr. Hotez assailed anti-science propaganda from American politicians and commentators, as well as Russian disinformation efforts. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy. Tim Stenivek in the Interactive Brokers Studio in New York. I'm joined now by Charlie Pellet. Charlie, with vaccinations increasing, we can say goodbye, at least for many banks, to the remote internship that happened last summer.
Indeed. A fantastic story by our Eric Krebs, Maria Heater, and Mary Bikert. 14-hour workdays followed by late-night dancing at Phoebe's Tavern and Grill. That's the notorious intern bar. Coffee with the boss on J.P. Morgan Chase's ground floor. Indeed, this summer at least, gone are the days of Zoom meetings and awkward virtual happy hours. I never went to one of those online. You know, I went to a bat mitzvah. I went to a memorial online. I never had a virtual happy hour with anybody. It's, you know, I just can't.
Had I known, I would have invited you to one. But you know what? I'd much rather do a real in-person happy hour with you, Charlie.
Exactly.
By the way, I didn't know that bar was a famous intern bar. That's a bar that we went to in grad school. It's a Cincinnati Bengals bar. So if you're looking to watch some Cincinnati sports, that's where you can go.
You know, you put me in an awkward position, because if I say I'm ignorant, on the other hand, that means I'm not prepared as a reporter. On the other hand, if I know about this notorious intern bar, that presents a whole nother set of issues.
That's a very good point.
I must tell you, I had not heard about Phoebe's Tavern and Grill.
Well, that's maybe a good thing. It's maybe a good thing. It's downtown. So it's the rite of passage. This is the coveted summer analyst program. It's a rite of passage for wannabe bankers. It's still virtual for many. Hundreds of Wall Street's youngest recruits, Charlie, they're working in person at J.P. Morgan and Goldman Sachs. Next week, more than 550 Citigroup interns are going to spend some time at one of the bank's offices, and the majority of them, Charlie, will be in New York. That's according to a person familiar with the matter.
Indeed, and it is great having interns back in the office. What a fantastic way to learn. I look back fondly with my college internship, and I just can't imagine how tough it was last summer when all these interns were trying to do their jobs via Zoom meetings and online.
I know. It's really good to have them back in the office. And here at Bloomberg, we have a fantastic group of interns. I've gotten to meet some of them, and they have been fantastic. This is Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellegroff. Session highs, but we could see records for the U.S. stock market with just about 40 minutes to go ahead of the closing bell. Let's get right over to the First Word breaking news desk for today's afternoon call. Here he is. Happy Friday. And we've got Bailey Lipschultz today.
Happy Friday to you as well, Charlie. Stocks are trading higher. A quick reversal from the sell-off we saw on Monday. The Dow is up 175 points, S&P higher by 40, while the Nasdaq has gained 135 points. The U.S. 10-year yield is at 1.28%, and small caps are up just 5 points. 9 of the 11 main S&P sectors are trading higher, led by gains in communications and consumer staples, while only energy and financials are trading in the red. Nasdaq biotechs rise 30 points, transports gain 80, semis are up 10 points, while VIX is lower by 3%. Leaders in the Dow, McDonald's, Visa, and Home Depot, while Intel, Honeywell, and Dow Inc. are the worst performers. After earnings, Twitter and Snap soared as results beat estimates, fueling social media peers like Facebook higher. Intel fell the most in 3 months after its sales forecast fell short, and American Express gained after quarterly revenue soared. In other news, Moderna rallied after its COVID shot was recommended for teenagers in the EU. Wrapping things up, China ADRs are headed towards their worst plunge since 2008 amid a regulatory crackdown. Live from the First Word breaking news desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey. Wild week ahead for earnings next week. Count on Bloomberg. We'll have it all covered. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. Thank you so much for the update, Charlie Pellet. I want to get right back to Michael Sonnenschein, Chief Executive Officer at Grayscale, joining us on the phone from New York City. Michael, I want to get further into Grayscale's products and talk a little bit about GBTC and others. GBTC is the ticker for Grayscale's Bitcoin Trust. It's still trading at a discount to Bitcoin. The idea here is that it does give investors exposure to Bitcoin, but it's trading at a significant discount to the cryptocurrency right now. What's it going to take to get those things on par?
Well, that's exactly right. So Grayscale Bitcoin Trust, ticker GBTC, is solely and passively invested in Bitcoin. The product trades, as the world's largest digital currency investment vehicle. We're the largest Bitcoin fund, hundreds of millions of dollars a day in notional trading volume. And what we have seen over the last few months is the product trading at a discount to NAV. And so what we've seen is many investors, particularly smart money and institutions, stepping into the product and buying shares of GBTC at a discount because that actually allows them to own or control or have exposure to more Bitcoin, buying shares of GBTC at a discount than it would if they take that same amount of capital and bought Bitcoin in the stock market.
So you're arguing that it's been a good thing for at least investors who've recently bought into it because they're essentially, if they were to buy today, get a 10.3% discount on the price of Bitcoin.
It has definitely been an interesting opportunity for investors who are looking for Bitcoin exposure in the form of a security, in a brokerage account, retirement account, you name it. Over time, we do believe that the product will converge its price back towards its net asset value, or perhaps maybe even reverts to trading at a premium. But ultimately, we are 100% converting this product into an ETF when the SEC is ready to make that kind of an approval, in which case the arbitrage mechanism is built in there to move the product back towards net asset value every day.
When do you think the SEC will allow that?
Well, I think the timeline around it is really tough to speculate on. I think the SEC is very encouraged and engaged with, participants like Grayscale and others, but they're really looking to see the market reach a point of maturation that's just not there yet, and looking for things like, more regulation around the spot exchanges, surveillance sharing agreements between the exchanges, a really larger, significantly regulated market. So over time, we'll get there, but when that will be is tough to speculate on.
What has interest been like in some of the other products as cryptocurrency prices have been falling? Grayscale's Ethereum Trust, for example.
It's been very robust. I think if you had asked me that question a couple years ago, I'd tell you that investors were really only interested in Bitcoin or interested in Ethereum. Today, Grayscale maintains a family of 15 different investment products, and that's really been built out in response to rising investor demand for access to either other digital assets or even certain subsets or themes within the digital currency universe.
So back to the idea of regulatory approval for Bitcoin ETFs, what's a realistic, I know you don't want to make a prediction as far as the timeline goes, but what's a realistic way for investors to think about actually getting exposure to Bitcoin in an ETF? Is it months? Is it years?
Well, I'd focus less on timelines and focus more on the opportunity. I think that certainly products like GBTC and their success and liquidity and how widely, traded and utilized they are is really the empirical data that investors need to recognize that today investors are accessing Bitcoin every single day through products like GBTC, and they're in fact not waiting for an ETF to come along, which certainly begs the question, well, then why do you guys even care about an ETF? And the answer is that we do believe an ETF will broaden us out to a wider audience of investors. And ETFs have been a very popular way for investors to access all kinds of investment opportunities. So moral of the story is investors certainly aren't waiting, but we also know an ETF will broaden access even further.
Hey, Michael, what kind of flows are you seeing right now, notably versus 6 months ago versus a year ago?
Well, I think flows continue to be really robust. When we look at the ways in which investors have been wanting to deploy capital, they, again, really do often look at these pullbacks in prices as opportunistic times to add to their positions. I'd say we're also seeing an increased appetite amongst our investors to diversify, that they don't want to just have Bitcoin or just have Ethereum exposure, but they're now looking at other areas to have exposure to, things like DeFi. We just launched the Grayscale DeFi fund, or looking at, protocols like Filecoin and others that are really showing other use cases for digital assets.
Just in the 15 seconds we have left, what are you thinking in terms of product pipeline?
Well, I'll tell you that we're not done. The 15 products Grayscale has today are all products we're proud of and are excited to bring to our investors. But certainly as market grows, our product lineup will grow with it.
Well, there you have it. Michael Sonnenschein, Chief Executive Officer at Grayscale, joining us on the phone from New York City. Michael, thank you so much for taking the time. We really appreciate you joining us on Bloomberg Business Week Radio. Well, coming up next, it is the song of the day, the chart of the day, and of course, the stock of the day with Dave Wilson, stocks editor here at Bloomberg News. This is Bloomberg Business Week, and this is Bloomberg Radio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, we are under 30 minutes from the close of the markets on this Friday afternoon. And we're just a couple of minutes away from that time. The song of the day, the chart of the day, and of course, the stock of the day with Dave Wilson, stocks editor here at Bloomberg News. In the meantime, let's get a check of that trading day with Charlie Pellet.
Hi, thank you very much. And here's what's going on. We've got 29 minutes to go ahead of the close. The Dow, the S&P, NASDAQ, they're on track for records right now. Right to the numbers. We'll give you the why in a moment here with the S&P up 42 at 4410. A gain now of 1%, extending the year-to-date gain to 17.4%. The Dow's up 220 points, up 0.6%. NASDAQ up 144, up by 1%. The NASDAQ 100 index up 1.1%. Russell 2000 up 0.4%. Dow Transport's up by 0.8%. 10 years down 230 seconds. 10-year yield 1.28%. Again, repeating, S&P up 42, higher by 1%. Blockbuster corporate profits pushing stocks to a record at the end of a turbulent week that started with concern about a peak in earnings and a coronavirus resurgence. Speaking of earnings, Snap shares, they're up now by 23.6%. Twitter up by 3.5%. Intel heading the other direction after earnings last night, down 6%. Honeywell checked in this morning, down now by just about 1.6%. Pfizer and BioNTech will supply the U.S. with another 200 million doses of their shot, setting up a stream of vaccine deliveries through next April. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and he says right now the vast majority of hospital admissions involve people under the age of 65.
It's true that these vaccines can have breakthroughs. We know that the vaccines are not 100% effective, but the data from those vaccine breakthroughs is showing that the disease spectrum is much, much less severe in vaccinated people.
And Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track for you on a regular basis, Pfizer up 0.6%. Its German partner, the ADRs, BioNTech up by 0.5%. AstraZeneca's ADRs up 0.7%. Moderna up 7.4%. J&J, Johnson & Johnson up right now by 1.1%. Recapping, 10-year 1.28%. S&P up 42 at a record, higher by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg. Newer. This is definitely like 90s, right?
Yeah.
Can you give me a hint?
Sure. His ex-wife was an actress, is an actress. So is his daughter.
I don't know. It's on the tip of my tongue. I can hear it.
And so is, or was, his mother. Let's throw that into the mix.
All right, who is it?
Lenny Kravitz.
Oh, yeah, of course.
His mother was Roxy Roker,
Yeah.
the Jeffersons.
Wow.
You know,
I'm already getting messages from people.
His ex-wife was Lisa Bonet from The Cosby Show.
All right,
and
so here are the
of course,
messages
his
that I'm
daughter,
getting.
Zoe Kravitz. So there you go.
Ouch. Come on, Tim. That's what people are saying right now already to me. For
You just got to
missing
dig
Lenny
into
Kravitz.
these. That's all I
All
can
right.
say.
All right, well, let's get to something maybe I can get. The chart of the day. What's going on there?
Can you get gold, Tim?
I can get gold.
All right, then. Now you're halfway home.
All right, there we
Andrew
go.
Garthwaite can get gold, too. He's a global strategist over at Credit Suisse. And he's basically saying if you're looking to diversify your holdings, maybe guard yourself against sort of a reversal of risk, you might say, then maybe you want to look at gold mining stocks at this point. And one reason is that they're still historically cheap. I say still because they're not as cheap as they were a few months back, but still by historical standards, they don't cost all that much relative to the broader market. And one way to see that is to look at projected earnings. That's what Garth Waite focused on. But I did it with an MSCI index of gold miners around the world. And when you run that number against the MSCI All-Country World Index, which is developed and emerging markets, you find out the miners are 32% cheaper relative to future earnings. Well, the discount was more like 50% a few months back. Nonetheless, as Garth Waite put it, the group, quote, still look abnormally cheap. And that's really his point, that he has other reasons that he goes through in a report he put out yesterday. Nonetheless, just looking at valuations, there's certainly an argument to be made, especially if you go back to 2013, as the chart does, and you find out that on average, the gold miners were 29% more expensive.
Dave,
and now they're 32% cheaper.
Do gold miners typically move in sympathy with the price of gold?
A lot of times they do. I mean, they don't necessarily track in terms of percentage moves. I mean, 1% move in gold might get you a couple of percent in the miners. They tend to be more volatile. Nonetheless, there is, at least to some extent, a historical relationship. So that's part of the mix as well. And, the way that Garth Waite's looking at that may turn out to be a plus, too. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So in some ways, is there fair to have a characterization of what this analyst is saying about the economy? If this person is saying, Credit Suisse is saying that gold mining stocks are cheap enough to be worth having?
Well, he's not really focusing on the economic argument so much as just things like
this is the value.
Debt.
Right.
That there's too much debt around, and maybe that's something you have to be concerned about as it's reflected in bond yields and what's happening to other commodities, the way their prices have run up and gold hasn't. The possibility of central banks buying more gold. So there are a lot of sort of arguments he makes in favor of the mining stocks, but valuation is where it starts, and certainly what you're seeing in projected earnings backs up what he's saying.
Okay, so in the meantime, in our last minute here, Dave, give us your stock of the day.
Boom.
Boom.
That's the ticker symbol. It's a company called DMC Global. They have a couple of businesses. One provides oil equipment used in drilling wells and so on. And the other is explosion welding.
Hence
where
the
you
ticker,
get exactly, where you get metals to clad together and you use dynamite to do it. Yes, hence the ticker. Unfortunately, their latest results kind of went boom because, and not in a good way. Third quarter revenue outlook, not what analysts were looking for. And in the second quarter, sales coming up short of their average estimate in the Bloomberg survey. You put that all together, and you're talking about DMC Global with a loss at the moment of 11%.
Oof. Check out Dave's stock of the day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter @TheOneDave. Let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey there, Nance.
Hey, Tim. The White House is expanding aid for mortgage borrowers who've fallen behind on payments during the coronavirus pandemic. Press Secretary Jen Psaki says the move is intended to provide help to those with government-backed mortgages.
Homeowners could see reductions in their monthly payments of roughly 20 to 25%, allowing them to remain in their homes and build long-term equity.
Psaki says relief will come through reductions in monthly payments and possibly through loan modifications. A bipartisan group of senators is working through the weekend with hopes of reaching some sort of deal on infrastructure. Those within the group say language might be finished by early next week. Bloomberg's Joe Matthew asked Congressman Kevin Brady if the deal will receive support in the House. Brady thinks it will.
I'm pretty optimistic we can actually find consensus on where we should invest in infrastructure. I think there's a way to pay for it. No, I'm convinced there's a way to pay for it without these crippling tax increases.
Brady says what will not receive support is if the infrastructure bill is linked to the Biden proposal for human infrastructure that comes with a price tag of $3.5 trillion. You can tune in for the full interview tonight on Bloomberg Sound On, right here on Bloomberg Radio at 5 p.m. Wall Street time. Tom Barrack will be freed on $250 million bond as he awaits trial on charges that he illegally lobbied the U.S. government on behalf of the United Arab Emirates. Barrack, the founder of Colony Capital and a Trump ally, has been in a San Bernardino jail since his arrest Tuesday. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much, Nancy. Well, earlier today, Intel CEO Pat Gelsinger spoke to Bloomberg's Emily Chang on the company's latest earnings and more. In this excerpt, Gelsinger talks all about the chipmaker working to rebuild relationships with some of the largest companies in big tech. Check it out.
Now, Pat, I know your relationships are key and you work hard on building those. How often are you talking to folks like Sundar Pichai and Andy Jassy, Tim Cook, Satya Nadella to try to lure some of that business back? And how are they responding to you?
Initially when I came back to them, I said, boy, we really want Intel to be back, but can we rebuild that confidence? And I've really leaned into all of those relationships and a few more, Emily, and it's building. They're seeing that shift in our focus, how we're leaning into the relationship, how we're putting more technical resources on site, working with their teams, the improvements in the roadmap. So overall, I'd say we're very optimistic in that regard. Also, like for our Foundry service, we announced that we have one of our first major customers as one of the big cloud guys. And we'll talk more about that next week. So overall, I'm seeing very positive movement in that area of our business. And given my relationships with those individuals, in many cases are decades long at this point, we can really build on that long-term relationship, the renewal of our execution, and a shared view of what we can do in the future. Overall, this is going well.
There you have it. Intel CEO Pat Gelsinger speaking with Bloomberg's Emily Chang on the company's latest earnings and more. He talked all about the chipmaker working to rebuild relationships with some of the largest companies in big tech. You can always check out more of that interview on the Bloomberg and at Bloomberg.com. Shares of Intel, after reporting earnings yesterday, are down right now more than 5.6%, 5.7% as we speak. The results were concerning to analysts, and they expressed concern about margins, despite the fact that the company beat estimates right there. Again, for more on that interview, check it out at the Bloomberg and at Bloomberg.com. This is Bloomberg Radio, and this is Bloomberg Business Week. Coming up next, we got much more of Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Late day rally here. We've got 13 minutes to go. Ahead of the closing bell, the Dow, the S&P, NASDAQ at or near session highs. Right to the numbers. We'll give you the why in a moment here. All about earnings, by the way. The S&P up 45, up by 1%. We've got the Dow up 257, up 0.7. NASDAQ up 155 now, up by just over 1%. 10-years down 1/32, 10-year yield 1.28%. Spot gold down 0.3%, 18.01 the ounce, and West Texas Intermediate crude now it's 72.04 a barrel, up by about 0.2%. Another raft of blockbuster corporate reports pushed stocks to a record at the end of a week that started with concern about a peak in earnings and a coronavirus resurgence. About 87% of the S&P 500 companies reporting results so far this season have beaten Wall Street estimates. Next week, by the way, shaping up to be unbelievably busy with some of the biggest names, including Apple, Alphabet, Facebook, and Amazon. Snap shares, they're surging 24% after last night's report. Twitter up by 3.5%. In the other direction, though, Intel tumbling now by 5.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Indeed, it is the drive to the close, just a little over 10 minutes away from the market close on this Friday afternoon. The S&P 500 higher by 1.04%. Session highs just moments ago. Joining us now is Brad McMillan, Chief Investment Officer at Commonwealth Financial Network, on the phone from Waltham, Massachusetts. There's approximately $232.5 billion in assets under management at Commonwealth Financial Network. Brad, thanks so much for joining us. It's great to have you back on the show. I got to tell you, at the beginning of this week, if you were to ask me what we'd be talking about on Friday, I did not think we'd be talking about just how good of a quarter so many of these tech companies that have reported have had. And at the same time, I think instead we'd be talking about that big sell-off that we saw on Monday, which the narrative was fears over the Delta variant of the coronavirus. What do you make of this wild week?
Well, I think it's actually good we saw a bit of a pullback because I think it acknowledges the concerns out there. But at the same time, I think this week has shown us that there's a lot more resilience in the market than people think. And it really does come down to fundamentals. It comes down to earnings. You know, there's a medical risk, but there's also a very strong momentum there. And I think that's what we're seeing.
Well, 87% of companies that have reported earnings in the S&P 500, they have beaten estimates. What does that tell you? Does that tell you that earnings estimates are too low, that these companies are aiming too low? Or does it tell you that the high stock valuations that we've seen of late are actually being justified by the results that we're seeing from these companies?
I think it's both, actually. I mean, one of the challenges analysts have faced is how do we adequately quantify not just the recovery from the pandemic, not just companies kind of navigating this, but also the fact that the companies have learned a lot about how to operate more efficiently. Because it's not just about sales, it's about better operations, it's about better margins, you know, companies doing more with less. And I think the message is analysts have not yet figured it out, and that says there could be more upside.
Where are you going to see that upside?
I think you're going to see it in the tech companies. They're the companies that are most poised to take advantage of kind of this hybrid economy. I also think you're going to see it in some of the specialized service companies like the financial industry, for example. Now, they've been constrained by interest rates, and that's real. But in terms of being able to be more efficient, being able to operate with the benefit of that, I think those kinds of companies are going to do very well.
I'm wondering specifically about the companies that we have coming next week, a real handful of earnings: Apple, Alphabet, Microsoft, AMD, PayPal, Qualcomm, Facebook, Amazon, and more. I mean, next week is the week when it comes to earnings. What are you going to be looking for?
I'm going to be looking to see how much sales have increased. I mean,
you want to see
we're
top
seeing
line.
companies, exactly. Because for these companies, they're already, the ones you mentioned, they're already largely tech companies. I mean, they've got scalability built in. So it's going to be more about, are they still continuing to make headway even though the economy is reopening? I think they are, but that's going to be the question to be answered.
Concerns about inflation at all? I mean, I know it's potentially a bigger concern for companies that are, sell CPG products, right? Like Kimberly-Clark, for example, saying inflation concerns weighing on margins. How are you keeping an eye on those?
Well, for me, what I'm looking at, I'm not looking at the year-on-year numbers so much because they're terrible.
Okay, traders, hello, it's time to place an order. I'm looking to buy euro. The price I'm looking to buy 117704. Okay, just right here. So if you're looking to trade euro, it's time to place an order. So stay with me Friday evening, but money never sleeps, market never sleeps, and euro against United States dollar never sleeps. So it's time to place an order for us. Okay, I'll speak to you later, guys.
Means about 2%, where we were in 2019.
So what would make you change your mind? What data would you have to see in order for you to say, wait a second, I don't think that this will be normalized?
I think the big wild card right now for inflation is going to be housing costs.
Yeah.
We're seeing property values go up. We're seeing rents start to go up. And that's a significant part of the CPI. If we're going to see a sustained increase, I think it starts there. And that's my big concern.
Yeah, this is something that Fed Chair Powell has been asked about at many of the most recent press conferences. And he has said that supply will catch up with demand. But I do wonder about low interest rates and the way that low interest rates contribute to housing prices going higher. And if we do continue to see bond yields under pressure and we continue to see the yield on the 10-year really at really low levels, then that means that people are going to be able to get cheaper mortgages, they can afford a more expensive home, and that could mean that prices continue to go up.
It certainly could. I mean, one of the things that I'm looking at for housing, I mean, we've seen amazing price increases, and that's probably not sustainable. But when you look at the supply-demand situation, there's a shortage of housing supply. That's why prices are going up. So there's a real foundation under prices that we didn't have in 06, 07, 08. So I think we might see a bit of a pullback, but I don't see housing as being the next crisis, at least not yet.
So what makes you change your mind there? What's the data that you'll have to see?
I think if we see a sustained increase in interest rates, that obviously would be a concern. Once you cripple mortgage financing, I think that's a problem. But to go back to your point about the 10-year, what the markets are telling us is that interest rates aren't going anywhere for at least the next couple of years. So if that's the case, that's one of the key things that's holding up the housing market. That's the only support that can really be knocked out, because the demographic and supply and demand mismatch, that's not going away.
I'm wondering specifically about the labor market. It's something that you brought up, and you do think that it will, quote unquote, normalize soon. Why do you think it will get back there? Because there still does seem to be this imbalance between supply and demand. There are millions of Americans who don't have jobs, and there yet are millions of job openings here in the U.S. If employers have to raise wages in order to attract talent, wouldn't that be a sign for inflation?
Not necessarily. I would say it's a sign that the market is working.
Huh.
It's a labor market. All of these people are going to be making all of this extra money. And most of these people are in an income tranche where they're actually going to go out and spend that money almost immediately.
record highs, but the Russell continues to lag.
Yeah, that's certainly the big question. Hey, Romain, I'm looking to next week because we're expecting serious earnings. It's like the Super Bowl next week, right?
Yeah, it is a
Apple,
Super Bowl.
Alphabet,
of course, we're going to
Microsoft.
get absolutely. We're going to get about a third of the S&P 500 reporting next week. We're going to chat about that in just a second here, Tim. But let's get you the closing bell here in New York on this Friday. 43.57 on the S&P 500. That's up about 1% as we wait for these numbers to settle. The Nasdaq Composite 152.39, up 1%. Both of those are record highs. The Dow Jones Industrial Average right now at 35,000. That's up to 238 points, about 0.7%. I believe that is a record high as well. I think somebody can ratify. No, maybe. Well, we'll double check that. And then of course the Russell 2000. This is what we really got to talk about here. It's finishing the day higher. It's finishing the week higher, but it still is the laggard here over the past few months. And if you just take a piece of that chart from the far right of your screen here, you get a sense here of maybe some of the trepidation about that cyclical rotation.
I can confirm record high for all the main indices: the Dow, the S&P 500, the Nasdaq, the Russell 2000. Though, as you say, the key laggard. So there is a desire to be buying into these riskier parts of the market, but not the cyclicals, Taylor.
Certainly not. Sorry about that pause, Caroline. Let's come and take a look at where we are in terms of some of those cyclicals on the sector level. For our radio audience, of course, as we do every day, we're looking at some of the gainers and some of the losers. The good news is there's a lot of green within the losers. I feel like I've been saying that a lot lately, but Tim, you certainly see the rotation out of some of that cyclical trade. It's autos, banks, energy, and semiconductors that are the big laggards on the day, but you're only off up to about 0.4%. We migrate higher, and I have to say it is media and entertainment. And Tim, dare I say it, this really pushes us forward to next week as well. You're up 3.3% on that sector.
Yeah, as Romain mentioned, a third of S&P 500 companies reporting next week. No shortage of where to find gainers and decliners today. Let's start with Snap, the company finishing the day higher by more than 23%. Shares soaring to a record after the company's second quarter results and guidance came in well above expectations. Facebook also moving in sympathy here, guys. If you're in online advertising right now, Mandeep Singh telling us earlier on Quick Take you are in a good position. Investors certainly thought that. Also got an upgrade, Caroline, from Credit Suisse, went to $480 from $400. That a street high. Can we for a second though pour one out for Sam Adams?
No, you can't. That seltzer you can't pour out. Not doing well.
Oh yeah, Boston Beer Company, the parent company of Sam Adams, finishing the day down more than 26%. That is a record single day decline for the company. Hard seltzer.
I blame Gen Z.
You know what? I have to tell you, I was never a fan of hard seltzer. And now the company coming out, remember, the company makes truly hard seltzer. The company coming out and saying, hey, this market is getting crowded, not enough new customers drinking hard seltzer.
Go back to the Angry Orchards, that's what I say.
What did you say?
Go back to the Angry Orchards, that's cider.
Like cider.
Go back to
Fancy
cider.
Though, not
okay.
The normal apple cider.
I'll do it.
Rosé.
Intel also finishing the day down post earnings. We've been talking about it all day. Caroline down more than 5.2%.
Yeah, some big losers there. What also we're seeing in terms of losing across asset, and we're going to the foreign currency market. And we talked about this risk-on sentiment. It meant that some of your havens of choice in the FX market were on the downside, looking at the Japanese yen off by 0.4%, your key laggard on the day. British pound also giving away a little bit at the moment, but not much of a narrative when it came to the currencies market. Dollar, though, did manage to eke out a slight gain today after having been on the downside yesterday. What also eked out a gain on the week was actually oil, managing to suppress some of those Delta variant concerns and actually looking a little bit more about the fuel demand, the driving that's going on in Europe, in the US, and across to Asia. So we actually saw Brent crude up 0.4%. We're back at about a $74 handle. Iron ore, some of the money coming out of the big metal commodities at the moment, maybe China pushing back against some of that. But notable, we've seen such gyrations this week and pushing ever higher for the likes of the coffee, some of the soft commodities. We had that perfect storm that we've all been talking about in terms of the weather, just extraordinary, from frost to fierce heat, all of it wreaking havoc across the commodities spectrum. So keep a keen eye on some of the commodities for next week. And the commodity producers' earnings coming thick and fast from key miners, key agricultural companies. We want to hear what they say on inflation. And I look at a picture also mixed when it comes to sovereign bonds, Taylor, around the world.
100%, Caroline. We're taking a look at where we are, and unfortunately, it looks a little unch on the day. You're trying to get a lift up in yields, but it really is that reflationary trade that's been the big underperformer. We have to talk about the 10-year, and Tim, I've been mentioning this on TV, and I'll repeat it to you on radio. You start off the week, if we can change the board from the intraday to that wonderful weekly that I know our producers have, it's like nothing changed. The 10-year yield last Friday, a 129. Today, a 128.
Wow.
But Monday, you had a big drip down to a 112, and there were some big thoughts that we might hit lower, like 1%. So certainly a lot of moves in the week, despite, well, it doesn't really look like much. But Tim, we digress because, of course, we push forward to next week, and it is really all about big tech, and it certainly was a high standard set by Snap and Twitter, as we know yesterday.
Yeah, and look, Facebook investors are certainly optimistic about what the company is set to report next week. Apple, Alphabet, Microsoft, AMD, PayPal, Qualcomm, Amazon, and more. This is like my Super Bowl. It happens once every 3 months. And this is like the best week. I never want to miss it.
The excitement. He doesn't want to go to space. He wants to come back down and be here for what all the earnings are saying. But of course, it's also notable that so many companies are beating analyst forecasts at the moment. About 87% of the S&P 500 so far have reported results that are beating Wall Street estimates. I know that you have some cynicism about that because, look, does it make sense anymore to be trusting what really analysts are saying?
Well, I'm glad you brought that up because, I mean, the margin issues are real here. I think Kimberly-Clark was sort of emblematic of that. The earnings at the top line actually weren't bad, but then you look at that margin compression, 800 basis points, and that's not the only company where we saw that from. And, I mean, you rattled off, Tim, a lot of those big cap tech names. Those are the resilient names, but you have to wonder what we're going to hear out of McDonald's, what we're going to hear out of Starbucks, what we're going to hear out of Exxon and Raytheon and Sanofi and all these names, your Procter & Gamble, companies that really have real input costs that they have to deal with that are maybe a little bit harder to pass on to the consumer in a way that maybe an Apple or an Amazon or whoever can do. You know what I'm saying, Taylor?
I am, and it's interesting. Anurag Rana putting out his latest research note on Microsoft pushing forward to next week, highlighting, Tim, some of those margin pressures, and that's a big word when you're talking about Microsoft and the cloud margin, but hinting that you can get a lot of that top-line growth despite some of the stickiness in the middle. And Tim, I'm going to leave you with this. It was a non-screen of Austin. He killed it this morning. Apple has this goal of being cash neutral. How are you cash neutral when you have $100 billion in cash on the balance sheet? And guess what? Your free cash flow, $90 billion a year. Basically, Anand said you aren't cash neutral.
Yeah, it's a really good point. I want to look ahead to next week because beyond earnings, we're also going to hear from Fed Chair Jay Powell on Wednesday for check-in on the press conference. Inflation will be top of mind, I know, for journalists and investors who are watching that closely. I just spoke to Brad McMillan, Chief Investment Officer at Commonwealth Financial Network. Over and over again, he said this is going to normalize. Inflation will go to 2%. Companies will no longer have trouble attracting and retaining talent. We will see that imbalance that we see right now. We will see that start to normalize.
Yeah, there's a lot of economic data, though, that's going to be swirling around this. I mean, you obviously want to hear whatever taper talk he's willing to offer up. But keep in mind, we do get those GDP numbers. Not going to be a surprise, that 8% rate that most people are looking for, but really about the sustainability of that. And so you can nibble at some of the durable goods orders data that we're going to get next week, the new home sales, and a lot of the other stuff. Taylor, are you awake? Are you
yes, I'm awake. I'm here.
Okay. Do I need to break out the Crocs again?
No, I'm nodding. I'm nodding.
She's been on
Are you drinking hard
seltzer? She's been on air since like 3 o'clock this morning.
Since 5 this morning, we've got our own little labour shortage sometimes. But it is notable that we are seeing toward so many mixed pictures from so many of our guests. For every one guest who says inflation is transitory, another one like Evercore ISI chairman will come on and say actually inflation is going to be at 3% for the longer term. So it's going to be a real debate, and we have to see what the commodity spectrum continues to tell us on that front.
We're going to have to, of course, wait and see. In the meantime, all of you have a wonderful weekend. We'll see you on Monday, same time, same place. That's going to do it for our cross-platform coverage day. We'll be back again on Monday on Bloomberg Radio, Bloomberg Television, and on YouTube. Have a great weekend.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Well, there you have it. Just 8 minutes after the close of trading on the day today, the Dow finishing the day higher by close to 0.7%. The S&P 500 higher to the tune of just over 1%. That's 44 points to the upside. The NASDAQ higher by 1.04%, 152 points to the upside. 5-day. We think about what happened on Monday, the sell-off. Investors came back. They bought the dip and more. The Dow finishing the week higher by more than 1%. The S&P 500 finishing the week by almost 2%, 1.96%. But the NASDAQ finishing the week higher by 2.84%. We're going to have much more on the markets and more in just a few minutes. This is Bloomberg Business Week, and this is Bloomberg Radio. Let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey there, Nance.
Hey, Tim, the Tokyo Olympic Games have started with the March of the Athletes and, of course, fireworks. Japanese tennis star Naomi Osaka lit the cauldron, and for Team USA, Sue Bird, who will be playing basketball, and Eddie Alvarez, who will play baseball, carried the U.S. flag into the stadium. Alvarez says it was a wow moment.
Oh my God, this is absolutely incredible. Thank God that I have Sue here holding me up, because I'm freaking out a little bit, guys. I'm not gonna lie.
Cheering on from the stands, First Lady Jill Biden. Well, big news from Major League Baseball today. The Cleveland Indians have officially changed their name to the Cleveland Guardians. Team manager Terry Francona spoke about the move today during a news conference.
We're trying to be the best Cleveland organization we can be and be united for everybody and represent the city of Cleveland like it deserves.
The team has been the Indians since 1915. Inflation is on the rise, and you can see it in our food prices.
It's most noticeable in restaurants rather than supermarkets, Agriculture Secretary Tom Vilsack said in a Bloomberg interview.
We're seeing increases in outside the home food costs, pretty significant. The overall food inflation rate is not that much higher than it normally is in the grocery store. As we begin to get the supply and the demand in better balance, I think you will see a moderation of the food inflation.
U.S. agricultural exports are likely to set a record this year, Vilsack said, and he's striving to find new markets, notably in South Asia. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Our Business Week weekend show features our interview with Walmart's Chief Sustainability Officer, Kathleen McLaughlin. In this excerpt, McLaughlin talks all about some of Walmart's climate change initiatives. Check it out.
You know, in terms of climate, we elevated our ambition. We were the first retailer years ago, back in 2016, to set a science-based target for emissions reduction. This last year, we elevated our ambition and said, okay, let's set 2040 as a date to get to zero emissions in our own operations, not net zero, but zero. And let's go faster. You know, we did set out a broader aspiration to become a regenerative company, which for us means needing to go beyond just being sustainable, but actually build back, whether you're talking about climate or natural ecosystems or equity.
Kathleen,
and, you know,
that's huge, right? Like, it's not just about reducing your impact, but then kind of bringing back our climate and our environment.
Right. Right. That's just one example. You know, we're now at a point, we know from the science, that we actually need to draw down emissions, you know, not just avoid further emissions. So it's a higher bar.
Well, that was Walmart's Chief Sustainability Officer, Kathleen McLaughlin, talking about some of Walmart's climate change initiatives. You can hear more of that interview on our weekend show at Bloomberg Radio and on our podcast feed available at Bloomberg.com. It does seem like pretty much each and every company is focused somewhat on ESG initiatives, and perhaps this week is one of the weeks that I've seen this in the sharpest relief when it comes to thinking about climate change. You have fires raging in the western part of the United States, and if you were here in New York in the early part of the week, you in fact saw some of that smoke in the form of haze, changing the way the sky looked, even though those fires were from thousands of miles away. You had flooding in China and Germany as well. Many people argue right now that these companies even need to take a more aggressive approach, given the fact that many of the companies that do highlight ESG initiatives are focusing on initiatives that are in the decades to come. We got much more Bloomberg Business Week Radio coming up in just a few minutes. This is Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A record close for the Dow, the S&P, and NASDAQ. Stocks moved higher. Another raft of blockbuster corporate profits pushed stocks to a record at the end of a week that started with concern about a peak in earnings and a coronavirus resurgence. The NASDAQ 100 index also rallied to a record, so let's begin there, up 1.1% on the NASDAQ 100 index. The NASDAQ Composite Index up 1%, extending its year-to-date gain now to 15.1%, surpassing the Dow. The S&P this year is up 17.4%. To put that in context, the Dow this year up by 14.5%. S&P today higher by 1%. The Dow today up by 0.7%. NASDAQ today up by 1%. 10-year yield 1.27%. Gold, spot gold down 0.3%, 18.01 the ounce. And West Texas Intermediate crude up 0.2%, 72.05 a barrel. So again, recapping, stocks at a record, S&P up 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, over at Blackstone, junior employees are vying for a $100,000 perk. And no, it's not about a bonus. Amanda Gordon is a reporter for Bloomberg News' Wealth Team. She joins us on the phone from New York City. Amanda, it's great to have you back on the show. I was surprised to see how this contest plays out. Take us into the details and what you witnessed.
Well, you put it beautifully. You know, you think in the world of private equity and finance jobs that a young person starting out is enticed by the salary,
right?
And no doubt, you know, that is part of it. But what Blackstone has tried to do is create an opportunity for people to think about their work life outside of the salary, and that they're not just there to get paid. As John Gray, the president of the firm, talked about when he kicked off the final round of pitches that these employees were able to make in front of senior executives at the firm on behalf of their nonprofit. So just to back up for a sec, they went through a month-long process where they formed teams, picked nonprofits, researched them, and decided how to make a case for them to senior executives as if they were pitching an investment.
Right.
And got to know the financials and, you know, why Blackstone would be interested in this nonprofit, and also to tell their personal stories of the site visits they've made or the volunteering they've done. And, you know, the end result is, to use John Gray's phrasing, the idea of being a force for good. And I really observed this all from the perspective of everyone in the world thinking about going back to work, back to the office, and what that means. And there's some resistance to it, as we know, and there's some enthusiasm to finally be able to get out of the house. But everyone can be a force for good, even if their firm doesn't have a $100,000 contest to give a prize to a nonprofit. It's everything from, you know, being able to hold the door for someone who's coming in behind you in the office, to saying hello to the guy at the lunch counter. And I really feel like what this story showed is that, you know, being back in the office there's just a host of opportunities that we don't get when we're working from home.
Well, as you do report in this piece, John Gray told you that in New York, 75% of the employees are back and more than 90% of employees are vaccinated. The company also reporting yesterday, Thursday, a record $28 billion of capital committed to new deals in the second quarter. One thing that really stuck out to me about this piece is, well, the way that you describe the pitch and the way that these 20-somethings, these young employees at Blackstone, they really do the same type of analysis on these nonprofits, and they're sort of asked the same questions, whether those questions are from the executive management team or Steve Schwartzman himself, about how effective the nonprofits are at potentially using the money that Blackstone will offer.
That's exactly right. And you know, I think when anyone is making a donation to a nonprofit, they want to ask these bring rigor to the process and not just let their heartstrings, be tugged at. And I feel like nonprofits, by being open about what their budget is, what their ambitions are, what their limitations are, can help, anyone asking those questions understand how they work. And so one thing that was interesting about the pitches is that they didn't use visuals or DAX, they didn't have PowerPoints or even notes with them. And they were only allowed 3 minutes, so they really had to make hard decisions about what to do. And I have to say, I think that not only did the contest result in some monies going to these charities, but at the same time, I would advise the nonprofits to get this talent and think about how they can make a 3-minute pitch like that and borrow some of the points that these employees were able to make, because that's what everyone needs. They need the decisive information in 3 minutes or less, and it's a testament to the fact that young people are engaged. And that was another theme that came out in the contest, because participation was up 40% from the first time that they did it. And COVID was, and the fact that COVID has hit some communities much harder than others, ran throughout these pitches. But we do see that there maybe is increased interest in becoming engaged and finding ways to give back and help communities that are hurting. And again, a sentiment that we really can all take to heart, whether you're back on Park Avenue in an office tower, or not yet back and counting the months and days until you need to be. So,
hey, Amanda, just in the last 15 seconds we have, what was the ultimate number of dollars that were awarded to how many nonprofits?
5 nonprofits got $100,000 each.
Wow.
Including a workforce development nonprofit called Strive, and Stop Soldier Suicide, which is helping identify people that might be at risk,
right,
and work to get them services. And then 5 others got $25,000, and there was an audience choice award too.
Some great organizations. Amanda Gordon is a reporter at Bloomberg News. She's on the wealth team here. She's joining us from New York City. Check out her story. It's at Bloomberg.com and available on the Bloomberg terminal. This is Bloomberg Business Week, and this is Bloomberg Radio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 1061 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, Obey is a $27 a month platform that counts celebrities like Kate Hudson and Drew Barrymore as members. It's partnered with HBO Max, Disney Plus, and Peacock, among others, to offer themed fitness classes that are linked to programs such as Sex and the City, Game of Thrones, and more. We're going to talk to the co-founders and co-chief executive officers of Obey in just a minute. In the meantime, let's get an update on the trading day with Charlie Pellet.
Thank you very much. Those bulls certainly in shape on this Friday. What a week it has been. It's on to the weekend. Stocks hit records today. Blowout profits heartened the bulls. Another raft of blockbuster corporate profits pushed stocks to a record at the end of a week that started with concern about a peak in earnings and a coronavirus resurgence. About 87% of the S&P 500 companies have reported results so far this season, and they have beaten Wall Street estimates. Brad McMillan is with Commonwealth Financial, and he was our guest right here on Bloomberg Business Week.
I think this week has shown us that there's a lot more resilience in the market than people think, and it really does come down to fundamentals. It comes down to earnings. You know, there's a medical risk, but there's also a very strong momentum there. But I think that's what we're seeing.
And speaking of momentum, look at Snap shares surging 23.82% today. Twitter shares after earnings higher by 3%. Intel, though, headed the other direction, down 5.3% today. S&P up 44, higher by 1%, again a record, and extending its year-to-date gain in the S&P to 17.4%. The Dow up 238 today, up by 0.7%. NASDAQ up 152, up 1%. 10-year yield 1.27%. Gold, spot gold down 0.3%, 18.01 the ounce. West Texas Intermediate crude up 0.2%, 72.08 a barrel. Amazon.com is investigating reports of toxic employee behavior in its cloud computing unit, a move that follows an internal petition from employees claiming systemic harassment, bullying, and bias against women and underrepresented groups. And GM is recalling its 2017 through 2019 model year Chevrolet Bolt battery-powered cars for the second time in less than a year after two vehicles that had been repaired in a previous recall caught fire. Recapping, stocks at a record, S&P up 44, up 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for the update, Charlie Pellet. Well, Obey is a $27 a month fitness platform that counts Drew Barrymore and Kate Hudson as members, and it just raised $15 million in funding from investors, including Samsung Next and Athleta from Gap. That values the startup at about $190 million. That, according to people familiar with knowledge of the matter. Joining us now are the co-founders and co-chief executive officers of Obey, Mark Millett and Ashley Mills. They're joining us on the phone from Brooklyn. Mark, Ashley, thanks for taking the time. How are you doing this afternoon?
We're doing great.
Thanks,
Thanks so much for having us, Tim.
Yeah, thanks for joining me. Well, Ashley, I want to start with you and talk a little bit about the fundraising process here. How difficult was it to raise this money from these companies, Samsung, Athleta, other participating investors include WW International, that's formerly known as Weight Watchers, Kavu Venture Partners, Wheelhouse Entertainment, and more. How difficult was that to do during the pandemic?
Yeah, it's a great question. So we've been very careful in the history of our company not to sort of overcapitalize, and so it was a big decision for us to go out and raise our Series A. Obviously, you know, with the pandemic, we were growing at a very nice clip pre-pandemic, but the pandemic was, you know, we grew 400% year over year.
400%.
Yeah, it was a pretty wild year to say the least. And a lot of folks have been coming to us for quite some time asking us to raise, and we weren't ready, and we were obviously super hands down building the business that essentially scaled overnight. So from a fundraising perspective, that piece of it was not challenging. I think what was like most exciting for us is being able to find the right partner. We really believe that you are the company that you keep, and so to be able to have Kavu Ventures lead around, they focus on a lot in the health and wellness space. And I think all of our new partners really see the future of fitness lifestyle in an important way. And then to the strategics who joined the round, so WW, Athleta, and Samsung, all of those partners we've had relationships with for quite some time, for years actually, in terms of various partnerships that we've worked on with them. And so it was a natural call when we started to think about fundraising to include them in those conversations. And we're absolutely thrilled with how the raise sort of turned out. We believe that Obey sits at the center of the good decisions business, right? And the good decisions ecosystem. And so we're excited for them to all be involved as we build the first of its kind entertainment network and really take on this category that we're calling fitness lifestyle.
Well, so it's so interesting, Ashley, that you describe it as a first of its kind entertainment network, because both you and Mark have a background in being talent agents, right? Having clients and being in the talent entertainment business. So Mark, what does it mean to have a talent entertainment network rather than having a fitness platform?
Yeah, absolutely, Tim. When we first started Obey, our vision was to reinvent what daily movement felt like, what it looked like, and what it could really provide people at home. So, in our old job as talent agents, it was our job to nurture great talent and to bring, pop culture to people everywhere, right? To really create these incredible mutual experiences around content and get people excited to pay, depending on their niche tastes and preferences. So we started Obey. We thought, wait a minute, fitness hasn't been reinvented in a while, right? It still sort of looks the same and feels the same. It doesn't feel topical. It doesn't feel variety-filled. It doesn't feel fun. And so that entertainment piece is really adding that fun factor, that topicality. Our instructors are the best in the business. They're incredible. They are the superhero best friends who motivate you throughout the workout and hopefully throughout the day, transcending screen and jumping right into your living room, your hotel, your basement, your office, wherever you're working out with us. And so we've also taken it to another level. We've partnered with some of the biggest stalwarts of the entertainment business, such as Disney Plus, NBC Peacock, CBS, Paramount. The list goes on to bring really fun pop culture centric classes to our audience as well. We've had classes with Game of Thrones themes, Sex and the City themes, Cruella from Disney Plus themes, right? So it's really about taking fitness and making sure it's not boring so that we can keep you having fun, getting the results you want, and hopefully putting a smile on your face in the process.
Hey, Ashley, just in the last 20 seconds that we have here, and then sit tight because we're going to come back to you, both of you, after we do some news here. How would you describe these classes for people who may be hearing this and saying, wait a second, this sounds like it's just watching someone work out on TV and not different from a typical class? Just 15 seconds here.
Yeah, it's a great question. So we offer 22 live classes a day, so you can work out with all of our members across the country and across North America. Here, being shouted out in class. You can also take one of our 20 different modalities on demand across all levels of duration. From a content perspective, again, we have the best in class talent. It's a really fun experience. We think of it as kind of a high broccoli approach to fitness. You're going to get a really effective workout, but you're also going to have a great time during the class.
Ashley Mills, Mark Millett, sit tight because we're going to come back to you in just a minute. In the meantime, let's get a quick check of world and national news with Nancy Lyons in D.C. Hey there, Nance.
Hey, Tim. Negotiations are continuing as senators work on reaching a deal on infrastructure spending. Senator Bill Cassidy of Louisiana is one of the Republicans on the bipartisan team working on that proposal. He tells Bloomberg they're pretty close to consensus on language in the bill.
We're working through today, through the weekend. We hope to have language either by Monday or by early next week.
Lawmakers are in the process of trying to pass two proposals that make up the bulk of President Biden's Build Back Better economic agenda. A $1.2 trillion bipartisan infrastructure bill, which focuses on things like bridges and roads, and a $3.5 trillion reconciliation bill, which focuses on social programs and climate change. The Olympic cauldron in Tokyo is burning bright for the world to see. It was lit at the end of the opening ceremony by tennis star Naomi Osaka. Bloomberg's Sophie Jackman is in Tokyo and says there is some relief the games are going on, but it's far from the party atmosphere that you'd expect.
Over the course of the year, organisers whittled down plans to have stadiums full of fans, and now the stands will be empty. Athletes are very much cordoned off into the Olympic Village and then their venues, trying to keep them in a bubble as much as possible. And the general population here, we're all under a state of emergency. We're being encouraged to stay indoors.
With overseas fans barred from these games, Bloomberg's Sophie Jackman reports Tokyo's hospitality industry is missing out on the usual windfall. Cleveland's Major League Baseball team has tossed the Indians name and is now going with...
Okay, guys, it looks like we need to cancel the order to buy euro. We will do it next week. Okay, the order to buy euro cancelled because this is the end of the week and just 15 minutes left until the end of a trading week. I'll speak to you later, guys. Have a great evening. We just will keep open all these charts and trading sessions to see maybe we will have something to sell like Bitcoin or other securities we keep holding. Okay, stay safe, guys.
Is having real-time information, and that means taking data off of a satellite, taking data off of an undersea sensor, off of an airborne sensor, processing it quickly and getting it to a combatant commander in the time frame that he can make an actionable decision. And I'll just give you one example. Last December, we worked with the Missile Defense Agency, and we detected, we did a test, we launched, or the Navy launched an ICBM off of the coast of Australia. Our sensors up in space picked it up, tracked it down to our ground station, fed it out to a ship in the Pacific, transmitted that to our one of our missiles, an SM-23A, launched and intercepted the missile over Hawaii. All of that without human intervention.
Which is phenomenal.
That's what AI is. You have to have that type of machine learning AI if you're going to be successful, because hypersonics are coming.
Right.
Right. Think about hypersonics, right? We're talking about things that travel Mach 5 plus. You don't have time for someone to say, how do I target that? Right. You have to have the systems that know how to get to those things and can take action.
That was an excerpt from our interview with Raytheon CEO Greg Hayes. You heard him there talking all about the company's new innovations, including developing hypersonic weapons. You can hear more of that interview in our weekend show. It's available on Bloomberg Radio and on our podcast feed at Bloomberg.com. We also talk in the weekend show about sustainability at Cisco and Walmart. And of course, the new space race. It's Bloomberg Business Week. It's our weekend show, and it's Saturdays at 8 a.m. on Bloomberg Radio and on our podcast feed that's available at Bloomberg.com. This is Bloomberg Radio, and this is Bloomberg Business Week. Up next, more with the founders of Obey.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Today of records on Wall Street for the Dow, the S&P, NASDAQ, 10-year yield 1.27%, but the S&P ends the week, heads into the weekend at 44.11. The Dow right now, 35,061. NASDAQ ends the week at 14,836. Another raft of blockbuster corporate profits pushed stocks to a record at the end of a week that started with concern about a peak in earnings and a coronavirus resurgence. Among the earnings standouts today, Snap surged 23.8% after earnings. Twitter was up by 3%, heading the other direction, though. Intel down 5.3%. Honeywell lower by 1.5%. Next week's going to be extremely busy for earnings. Absolute reason to keep it locked into Bloomberg Radio. Apple, for example, up today by 1.2%. We'll hear from Alphabet next week. Shares up by 3.4%. Facebook also next week up 5.3% today. And Amazon up by 0.5%. Today, the S&P up 44, up 1%. NASDAQ up 152, up 1%. The Dow up by 0.7%. Gold down 0.3, 18.01 the ounce. West Texas Intermediate crude up 0.2%. 72.09 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, I'm speaking with Mark Moulette and Ashley Mills. They're the co-founders and co-CEOs of Obey. It's a $27 a month fitness platform. It counts Drew Barrymore, Kate Hudson, among many others as members. It did just raise $15 million in funding from investors, including Samsung Next and Gap's Athleta brand. Mark, Ashley, I just got a question during the last break from somebody who's listening right now in the Bloomberg Network who asks, why would I subscribe to this if I have a Peloton subscription? Do they have enough content to get people to switch? Who wants to take it?
Yeah, I'll jump in here, Tim. The answer is we have plenty of content for anyone and everyone. You know, for that $27 a month or $199 annually, we have so much content to sate all of your fitness needs at any level in the game, right? If you're a beginner or if you're a triathlete, we are here to help you to find the results you're looking for and hopefully help you make some friends in the process. Our community is off the charts. But we have over 20 modalities, over 20 instructors, again, the best in the business, and class lengths from 10 minutes all the way up to 1 hour long. So whether you're working out for 10 minutes, in your office with the door closed or a full hour at home with the kids asleep, we really have something for everyone.
But if Peloton does offer that monthly subscription that you can get on the app or you can use on an iPad or a computer without actually having one of the pieces of equipment, how do you get someone to switch, Mark?
Yeah, I think the reason that people love Obey, in addition to the community, in addition to our incredible talent, is the premium nature of what we deliver every day, right? Our content is gorgeous. It is so personalized. It is colorful. Our signature light box really, provides like a music video in your own living room when you're working out with us. And I think that the premium nature of what we do and the variety therein is really what our audience takes to. We've learned from so many people over the years, and specifically even as we head into this COVID transition world, that for over 50% of our audience, we are their fitness everything. And then for another substantial portion, about 40%, we are a main dish on their fitness buffet. In the same way that you don't want to, eat the same foods every day, you might not want to move the same way every day. And certainly if we are your fitness everything, we will keep you moving in different ways every day. And if we are on your fitness buffet and you're going to the local bar studio or local yoga studio as well, we're here to get you on those days where you're at home or on the go.
Hey, Ashley, you mentioned earlier that there were 400, you had a 400% increase in subscriptions. That's correct, right? During the pandemic?
Yes, that's correct.
How did you keep operating during the pandemic? Because you did also say that you were shooting live shows and live classes for your network.
Yeah, absolutely. So, in the very, very beginning of the pandemic, when everything hit, we basically assembled production studios in our instructors' homes, and that went on for obviously several weeks. as the government was figuring out what was what. The thing about our production is that it allows for social distance. There's not a lot of crew members that are needed in the studio, and some of it can be done remotely. And so we were deemed an essential service pretty early on in the pandemic. So we were able to continue, to bring people back into the studio again with, absolutely adhering to all of the safety precautions.
Can you talk, Ashley, more about the entertainment nature of this? If you are just joining us, Mark and Ashley are former talent agents who built Obey as an entertainment network rather than a fitness platform. So, Ashley, I'm wondering about the entertainment aspect to this and the idea, as you and Mark have been talking about, that there have been themed classes in the past that have been, themed to Game of Thrones, for example.
Absolutely. So there's certainly those tentpole moments, but I would also, in talking about our content, I would look at it outside of the tentpole moments as well, and sort of like our core offering, which are these, 20 different modalities across a number of different durations. So Mark and I, we never took our talent agent hats off. When we left the agency business, we started looking immediately for who were the really incredible, ebullient personalities who were great storytellers who could lead our members through a class and what should be an emotional journey. And so the given for all of our classes that they're super effective and you're going to get a great workout. And the X factor is the talent and the personality and what we call entertainment, right? Where entertainment and fitness meet. So that is, yes, the talent. It is the beautiful set inspired by contemporary artists James Turrell and Dan Slavin. It is the music. It is the storytelling. It is the topical nature. We do 22 live classes a day, and because of that, we can address what's happening in the world. And so in a lot of ways, taking a class at Obey, it's going to deliver on the same level of entertainment that you would get from a television show, but you're getting a workout during the process.
Yeah, actually getting a workout while you're streaming whatever you're watching. Exactly. Sounds kind of nice. Hey, Mark, wondering about the product pipeline here. Are you thinking at all about hardware and getting into the hardware business? I see Samsung as an investor, a company, of course, known for its hardware.
Yeah, absolutely. So, the year ahead, and again, one of the reasons that we raised was to build out our good decisions ecosystem, right? We see Obey as the center axle of that ecosystem. So it's not just about the push-ups and the planks. It's about what you eat, what you wear, who you connect with, your level of mindfulness, how you sleep, et cetera. On the hardware front, to date, we have required little to no equipment. When I say little to no, I mean workouts that are body weight only, all the way up to workouts that require maybe some, hand weights or resistance bands. On the hardware front, we've heard from a lot of our members that they have purchased hardware during the pandemic, and frankly, they're not always feeling that inspired to use it. So we are beginning to explore, how our content, how our premium content and our specific point of view could translate into, heavier gym equipment and hardware-related verticals. On the electronics front, our goal is to be the leader in fitness lifestyle for all people in all places across all screens, and that includes wearables. So right now we're digging deep into our wearable strategy, and we can't wait to get that out to our audience as soon as possible in a very Obey way, of course.
I actually want to give you the last word. Give us a few more details on the wearable strategy, just 15 seconds.
Absolutely. So, most people wear a wearable, and we're excited to be able to track our members in class and also in their daily life.
Starting to make sense why Samsung is an investor in the company. Mark Moulette and Ashley Mills, co-founders of the fitness platform, entertainment platform Obey. They're also co-CEOs of the company. Joining me on the phone from Brooklyn, New York. Sound On with Joe Matthew coming up in just a few minutes. And right now joining us from Washington, D.C. is Joe Matthew. Joe, what do you have planned for the show today?
Well, I was going to ask what you had planned for the weekend. Are you working or are you going to have a weekend? Because
I'm going to have a weekend. I'm taking a break.
It's a working weekend in Washington. They say no one ever works here, but it's all about infrastructure, Tim. We'll hit this right at the top. We could have a deal announced on Monday. We'll be joined by Congressman Kevin Brady, Republican from Texas.
Well, looking forward to that show. Sound On today at 5 p.m. with Joe Matthew. In the meantime, have a great weekend, everybody. We will see you at 2 p.m. Wall Street time on Monday. This is Bloomberg.
from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.